Hi, good morning everybody. This is Nicholas Teo from CMC Markets here in Singapore on the 2nd of July 2015. A few things I want to flag. In my morning note this morning, I talked about a move by Wilmar Group, a local commodity trader here in Singapore, with regards to some sugar shipment that they decided to actually exercise for in exchange for contracts for physical cargo. Now, basically, just to pull the chart up here on sugar, we see them being Wilmar, being one of the bigger traders or sugar traders in the world, exercising such a move to take on the physical delivery signals that they are willing to take stock and hold it in inventory, and sometimes this can be driven by the fact that they expect prices for sugar to actually go up. Now, they've done a similar move early this year, in July, or rather in May, when they did this, and that caused this big move down here in the sugar prices. And last night's move again triggered a strong buy signal where traders watching this commodity were concerned. Now this chart looks interesting, and this is a chart which is reasonably similar to some of the other soft commodity charts which I've showed you the last couple of days. Soft commodities meaning wheat, corn, and also soybean, all of which have seen actually huge spikes up purely because traders are more or less preparing for the onset of the effects of El Nino, and with that effects come a lower crop yield. With lower crop yield, the expectations of a higher raw material price sets in. Now, just to draw some lines to put things into perspective, I mean, we've seen this steady decline of sugar for very much part of this whole year. However, we are starting to see things leveling off down here, and we've seen signals from key major buyers of the commodity actually stepping in onto the plate. Now, it's something that I would definitely be watching out for, because if we see a breakup from this sort of range, we can see this bottom more or less being confirmed. But at this point in time, most of the other comparable soft commodities have actually shot up. Admittedly, most of them were based out of the US commodities on the back of a US Department of Agriculture report, which suggests that the weather may have taken its toll on crops. So it's something that I want to flag everybody's attention to and to continually follow. Last night, on the same strain of commodities, oil or crude saw a big push down, or a big sell down. This was motivated by two things. One, there was a closer there was a belief that the Iranian nuclear agreement program was going to be resolved pretty much soon. Now, the other thing was that late in the day, last night in the US, a surprise build in inventory, as opposed to an expected drawdown in inventory, hit the market in the weekly reports, and this caused for crude, and this is a WTI chart, this caused for crude to actually be sold down. Now, I've flagged time and time again in some of the presentations that crude for the last 2-3 months or so has had this narrow sort of range, and it's starting to break out from that range. Now, in most of the presentations last month, for those of you who had attended, I brought this chart up to show that, you know, once we see this breakout from this range, either up or down, we could see a fast move purely because of that extended consolidation period. This extended consolidation period of this sort of minor move that we saw. So with this breakdown, it looks like an interesting play which could possibly be testing even lower grounds. The next sort of target levels could possibly be around this $54 level down here as a first sort of reach, and this move can be confirmed if we see this breakdown of this range, today's breakdown of this range down here. But clearly, if this doesn't happen, and if crude breaks back into this sort of range, then we may see this thing drift for a further while along this this extended sort of range. The other thing is, in Singapore, I want to flag First Resources. First Resources falls under the commodity sort of place in Singapore. I brought this chart above. I mean, I've shown this chart before. This move yesterday, this is the red candle, had not been supported by a follow through. At the close, it came down, but today we are seeing a little bit of action down here. This green candle, this big green candle, clearly suggests that this stock is continually still being in play. A breakup of this level, let me just put a resistance line here. is actually quite important. A breakout of 209 could lead prices higher because this consolidation again of this big move down here seem to have been done. And I think the price chart down here signals that we could see higher prices from here. Obviously, the motivation would be the impending arrival of El Nino, and with it higher raw material prices, and with First Resources being a upstream producer, they will probably benefit, or they could benefit. There's also a gap that I want to signal, which is here, and this could be a gap that could be a target for a lot of the traders, which is around 219 or so. Obviously, if this fails to break, or if it breaks up and returns back in, and then it's a signal of a false break, this thing could fall lower down. And if that's the case, then the next support will be only at 203. So things to watch out for, and certainly stories to play. Where data is concerned, tonight the big announcement that I think most eyes will be on will be the payroll numbers. This is an earlier than expected sort of report, purely because the US go into an extended holiday break this weekend. We're seeing a number of 225, and expectations again, anything between 200 to 250 is something that the market can take willingly, because it falls under or within the expectations. Anything beyond those numbers would then probably move the needle in a big way, where the dollar is concerned, where the bond market in the US is concerned, and also where the stock market or stock indices where the US is concerned. But certainly several things to follow in this otherwise sort of quiet market. Thank you.